We have data on several hundred companies we own, and we look at that and we compare it to how the economy usually does, and we actually sometimes send that to the Fed as a way for them to have additional information. Our data does not show a recession anytime soon. This is the most anticipated recession in history, but it hasn't happened yet. And our data does not show a recession coming in the United States in the near future.
While many people are starting to believe the US just dodged one of the most anticipated recessions of all time, I've got a few concerning points showing that the worst has actually just begun. Now, some of the arguments behind why the recession has been dodged this time is because some of the banking stress is over, or it seems to be, consumer spending is at all-time highs, and the stock market has had one of the most impressive 6-month gains in basically the last, I would say, 20 years. As you can see over on this chart, in the last 6 months, we've risen almost 35% in the the NASDAQ 100. You can see that these gains are equal to what we saw in the pre-dot-com bubble, which obviously we know how that happened afterwards. However, there is one concerning thing that when you actually look into the NASDAQ 100 and the S&P 500, you can see that some of the gains are unequal. Now, if we equally weight the S&P 500, you can see that the annual gains or year-to-date gains are actually below 0%. And obviously we know this because we've had the AI craze and basically 7 mega companies carrying the entire NASDAQ 100 and the entire S&P 500, basically showing us that while the stock market may look good, really it's just these 7 companies. Obviously we know them to be like Meta, Tesla, Amazon, Nvidia, things like that. And you can see the S&P 500 is up around almost 10% year to date, but the NASDAQ, again, showing those insane gains of post 30% gains year to date. Now you can see that over the last 5 trading days, the S&P 500 has actually been down 2.4%. And if we take a look at the NASDAQ, it's also showing something very similar. So it could be the start of where we see this massive retracement or another low being set in for the S&P 500 and NASDAQ. And to couple some of this bad news, the technology sector has seen $2 billion in outflows. That's the largest in the last 10 weeks. And this is based off of a Bank of America analysis report that they put out just recently. Now, on top of the stock market doing well, we obviously know Bitcoin has been doing very well. And a lot of this comes from the BlackRock effect. Now you can see that aside from the ETF filings, there are also big things coming out for the crypto industry like the EDX markets, which are basically institutional cryptocurrency exchanges offered by Citadel, Fidelity, and Charles Schwab, basically allowing institutional money to come into cryptocurrency. So this is a massive thing for the crypto markets and basically the equity markets in general, because we're going to see a lot of inflows of money coming in. However, Bitcoin's price going up might actually be a bad thing for the US economy. Why? Because when you think about Bitcoin, it's seen as a safe haven. It's a tool against a failing economy. And for this reason, let's look back at the early parts of March 10th, when SVB Bank failed. That's one of the largest rips that we've had year to date in Bitcoin's price. Why? Because as the bank failures started to come and a lot of people thought that's when the recession was going to happen, a lot of people flew into Bitcoin because they saw it as a safe haven. Why? Again, because it's a tool against, or it's a hedge against a failing economy, because it is just sound money. Now, a really good thing for people who do hold Bitcoin is that you can see that after the third halving, the available supply for trade has been continuously going down. And with these US recessions looming and more of these institutional buyers coming in, that supply is going to continue to go to the downside. And what happens when you have ultra demand and low supply? Typically, the price skyrockets at that point. But one thing we have to realize is the bigger picture. Where's the US economy going and what is the Fed doing? After Powell told US lawmakers this week that more rate hikes are likely, the 10-year yield slipped to a full percentage point below the 2-year rates, deepening a yield curve recession that's usually seen as a harbinger of a recession. And to show you exactly what I mean, what I have here is the 10-year over the 2-year yield curve inversion. Now, every single time that this inversion happens, you could see that when it uninverts, we go into a recession, as you could see right here in 1990 or the early 90s. Again, it inverts right here, and then coming out of the reversion, we hit a recession. Again, the global financial crisis, we invert over here, coming out of that inversion, a recession. Same as the pandemic, inversion, coming out of it, recession. But unfortunately, the data for TradingView doesn't go back to the 80s, but This is the largest inversion that we've ever had in the 10-year and 2-year since the 80s double recessions. And obviously we're not going to see recessionary things happen right now, because we know that just looking at the data, every time that it uninverts, coming out of the uninversion, that's when we start to see the recession actually happen, or that's when the Fed declares it. And as you can see right now, we are still pretty deep in this inversion right here. Now, if we look at the 5-year Treasury bonds, they're currently at 4.05% as of June 22nd. Those are the highest levels in over 3 months. This means that investors are not expecting inflation to drop below the central bank's target point of 2% anytime soon. However, it also indicates that investors are confident that the peak inflation data from June 2020, which was 9.1%, June 2022, that 9.1% is behind us. It's also important to understand that Treasury bond prices work differently than other investments. Investors are willing to accept lower returns or the yield in exchange for the security of owning a quote-unquote low-risk asset like U.S. Treasuries. In simple terms, if people believe inflation will continue, they will seek higher returns by Treasury bonds. But if the U.S. government is devaluing its currency, or if inflation is expected to increase, investors will prefer the safety of Treasury bonds, resulting in lower returns. And again, it's really hard to decide if we're in a recession or not, depending on what data points you actually want to look at. If you look at a few, they're going to say we're not in one. But if you look at others, they say that we're on the brink of one, or we're going to hit one very, very soon. Now, you can see in this interview with Nassim Taleb, he talks about why we're actually going to be going into a recession and why the interest rates are so important compared to as they were back in the day.
So help us, though, talking about stability and risk.
Yes.
Where do you think we really are in these markets? We've had Barry Sternlicht come on and just tell us that the Fed doesn't know what it's talking about, and that actually things are much worse than we know.
Let's talk a little bit big picture, okay? 2008, we had a debt problem. No? The Fed put the interest rates at 0 for 15 years. Now, lowering rates to 0 made no sense. You know, they didn't try, they panicked, you know, they didn't try to lower it to 3%. They went all the way to 0. And once it's at 0, it's very hard to raise it.
Right.
So now we're going to have to learn to live in an environment with higher interest rates. And 15 years, you know, that's a generation of traders, a generation of finance practitioners who don't know what interest rates mean. So welcome to a new era.
So obviously nobody knows what's going to happen in the future, but as we continue to look at the data points and understand what's really happening, the best thing you can do for yourself is position yourself in an asset that doesn't have any third-party risk or counterparty risk. And one of the few things of that is Bitcoin or gold or precious metals, anything physical assets, something that's not manipulated by other people. And that's everything I have for this video. If you guys enjoyed it, make sure that you guys stick around, subscribe, and I'll keep you guys updated with new ones.